With companies enjoying the tax cuts from 2017's tax overhaul, the personal finance website Wallet Hub released its latest corporate tax rate report. At the top of the list, San Diego's own Qualcomm. Its overall tax rate, 1,048%.
How is that possible even? Joining us on the KOGO News Live line, CPA and San Diego State lecturer Narelle MacKenzie. What's going on here?
Well, good morning, LaDona and Ted. How are you?
Very well, thank you.
Very good.
So what's going on is, I don't know if you remember, Qualcomm paid a lot of penalties to the FTC and other similar organizations around the world. So all those fines and penalties they paid, they don't get a tax deduction for that. So although for their book purposes they took a deduction, they don't get that for tax. So that's one of the reasons for the higher tax rate.
All right. I'm sorry. Go ahead.
Oh, sorry. The other reason is, you may remember with tax reform, we had that pickup by companies for earnings that were kept offshore and hadn't been subject to U.S. tax. And so we had that transitional tax of, if it was cash, 15.5% and non-cash assets of 8%. And so that's also factored in there as well.
So why is there such a huge disparity between, let's say, a CVS Health Corp, which apparently is paying 142.4%, and an Adobe paying 7.3%?
Well, I'd have to go look at the financial statements for both of them because I don't know the answer to those questions off the top of my head, but it will be because of different tax planning techniques that some of the companies use, or, like Qualcomm, they've certainly got a great tax department, but, when you have penalties assessed, you can't get a deduction. If you look at someone like PepsiCo that had a negative tax rate of 36%, they had a lot of tax audits settled, which they had provided for, and then they were all settled in their favor. So that resulted in them having getting back more taxes than they had to pay on the earnings for that year, as an example.
So what does all of this mean to us, people who are listening?
What does it mean to all of us? Well, we're not companies, right? So we don't get that lovely new tax rate of 21%. Federally, the top tax rate for individuals is 37%. And in the state, of course, most of the corporations are at 8%, whereas the top tax rate for individuals in California is 13.3%. So basically, individuals end up paying a tax rate that's higher than corporations. But in fairness, the corporations do employ people. So I guess that's one of the encouragements of the lower tax rate, is that it should encourage more people to invest in the United States from outside the United States.
But still, as an individual, you might be listening to this and going, seriously, how come I have to pay so much more? And I don't have unlimited, I don't have a way to increase my income, which corporations do.
You guys going to get a new job? No, sorry.
That's true.
Well, the idea about businesses is you want to encourage businesses, right? So if you are a business owner and you are operating through, traditionally an S corporation or an LLC, the lower corporate tax rate was supposed to be offset by that additional deduction that came in for business owners. It's 20% of your business income is another deduction. But unfortunately, it doesn't really work that way, because we individuals have to pick up all our income, whereas a corporation, yes, when they pay you a dividend, you're going to pay some more tax, but, there are ways they don't have to pay dividends currently. So that if you are a business owner operating through a C corporation, can actually keep your tax cash flow lower than if you're operating through an LLC or an S corp.
CPA and San Diego State lecturer Narelle MacKenzie, thank you so much for your time this morning.
You're most welcome. Thank